Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, I'll run through some examples on how to scalp using moving averages. In front of you, I have the Ripple tether chart. You can see that it is a very noisy market, but there are a couple things that I would point out, like how you would truly use moving averages. So we want to mark up the chart. And we want to see, where is there going to be support and resistance? That's the first thing we're always going to do. You can see that basically right around 46.20 and 46 even, there seems to be at least a little bit of market movement. You can see resistance, support, etc. Now, the setup is actually once we break resistance with volume. So now that we have that, where is the most obvious place to put a stop? Well, it would be just below. So put it behind the previous line. And, what are you going to aim for? Well, common sense would say, let's aim for here initially. And you hit it like almost immediately within 10 minutes. It's a perfect trade. You could go for something a little bigger, but notice how this is a major area going back. So that just sets up for a nice little trade that you would expect to see. With volume, that helps too. Let's see, Phantom. Let's see what we have in Phantom. So again, here's a nice little area here that had been quite a bit of resistance. You can see it mattered back then, but notice this is like brick wall. Notice this big candlestick with volume that closes above that wall. That in and of itself gets you interested. In this case, the moving averages are spread out, and you can just put your stop loss below the moving averages. Now, it comes down to, do you want to ride it as long as you can? Do you want to aim for this? Do you want to aim for this sell-off point? As a general rule, you want to ride it as long as you can, but you can see this is basically where it ended up. And that does make a certain amount of sense. You can see it was important support there, and now it's resistance. It has since rolled over. And in fact, you can see that it's absolutely fallen apart. Let's try something else here. Doge. Okay. Big spike higher, but it was accompanied by volume. Notice this little resistance area. We broke above there and started to build up volume. There was no reason to get short of the market then. So as you zoom out, this is an area that was previous resistance or previous support, followed by resistance there. And then we did break through there. So the question is, how would you have managed it? You could have made that your target, or, and in this case, I don't think it would have changed much, or you could have said, all right, once we close above there, I put my stop loss there, you get taken out anyways. But you can see, where I'm going with this, that you want to let it run if you can, and just find places of support and resistance, or the moving averages, to have people get in front of you to offer buying or selling pressure to protect your position. And if they get blown through, then it's time to get out. The EMA trading system is great, again, if you have some type of trend. If you don't, like I said, in situations like this, it's just horrible. There's no use for it. There is a tool that we can use in a sideways market. It's called a stochastic oscillator, which happens to